What's up, everybody? Welcome back to another episode of Economic Events. Today, we're going to be reading an article from the New York Post regarding Google and Robinhood. Let's get into it. So, Google parent Alphabet dumps 90% of its stake in struggling Robinhood trading app. In a significant move, Google parent company Alphabet has sold 90% of its stake in Robinhood, a popular trading platform. This decision indicates a change in Alphabet's investment strategy and raises questions about the tech giant's outlook on the future of the fintech industry. The sale comes amid ongoing discussions surrounding the regulation and scrutiny of trading platforms, adding further interest and speculation to the implications of Alphabet's divestment from Robinhood. So, Alphabet had reportedly invested in Robinhood when the latter was an unlisted startup, and it held over 4.9 million shares in the company as of the end of 2021. That stake was worth nearly $419 million when Robinhood shares hit their peak of $85 back in August of 2021. This was about a month or so after they had done their initial public offering, which is ironic because I know a lot of people that were shorting Robinhood stock while using Robinhood platform. A little bit weird there. Following the sale, Alphabet now owns 612,214 shares in the company, worth about $7 million, according to Reuters calculations. And Robinhood shares have dropped 86% from their record levels. So we're talking about $85 a share was their peak. 86 is taking 86% off that. I'm not gonna embarrass myself and do the math right in front of you guys. So, but there's good news for Robinhood in the near future. It looks like, because Robinhood said that it had turned a profit for the first time as a public company, surprising Wall Street, which was expecting a loss. So at least they're going in the right direction as far as that goes. However, not much of a good direction, because monthly active users on the platform decreased to 10.8 million, 1 million fewer compared to the first quarter, and 3.2 million lesser than last year. Robinhood has been looking to expand revenue streams. It agreed to buy financial technology and credit card firm X1. So for those of you that don't know about X1, it's a credit card company. There's not much to tell. It's no different than Discover. Well, maybe a little bit different than Discover, American Express, MasterCard, Visa, whatever. You get it. So, I don't know if many of you guys use Robinhood or not. I've used it in the past. The interface is very simple, very easy to use for somebody who's a brand new investor trader. So there's some benefits there. But they don't have commissions like these other platforms do, where they have I know, like a Charles Schwab, for example. If you buy an options contract on there, it costs you 65 cents to get in, and I believe 65 cents to get out. So you're talking about $1.30 you got to spend just to do the transaction. Whereas Robinhood, you don't spend that. So there's a positive there, but also it's not a positive for the company, because that just means they're not making money through trades. Anytime a company is giving you something for free, you're the product. Just keep that in mind going forward. But like I said, I've used Robinhood in the past. The interface is very simple, very easy to use. That's kind of the blessing of it. But it's also kind of makes it feel like a game, like you're not really using real money. So that can be a little bit concerning when you've got money on the line and it just looks like you're playing Candy Crush, and you buy your stock of Apple, and then there's a little like confetti coming down, and it just looks like a joke. You got to be a little bit more serious if you're gonna be a financial company, if you're gonna be a trading platform. So there's pros and cons to that. There's other good platforms. I like using TradeStation. Interactive Brokers is a good one. So I'm not here to promote those. I'm not being sponsored by TradeStation or Interactive Brokers. But if they do want to throw me some money, I'm not gonna say no. I'd happily take it. So if you guys are the marketing team with TradeStation, Interactive Brokers, if you're watching this video, I'm interested. Okay. So, but I digress. Alphabet, I know that they've had a history of antitrust laws, and I don't want to get into that too much. I'll save that for another video down the road possibly. But they've had issues there, and this they may be seeing that, hey, Robinhood is on its way down, with monthly users continuously dropping like that, and with their monthly users dropping like that on a I think it was a million less compared to the first. Yeah, it was a million less compared to the first quarter, and 3.2 million less than the previous year. So that's not good. You're losing customers. So Google may have just used this as an opportunity to just get off a sinking ship, and somehow may have made it sound like they're doing it to avoid these antitrust laws. So that's just my opinion about that. I know that Google is a massive company, especially when it comes to search engines. It's one of the top ones. I mean, you've got the Bings, you've got the DuckDuckGos of the world, just to name a few. You got even Yahoo to search some stuff, but they're not as precise as Google is. So there's a huge leap there as far as how beneficial and productive it is. But with Robinhood, I think it's time. I think their time has come and gone. I will say one of the good things that they did was that they came in and they had no commissions, which at the time these other companies like Charles Schwab, I think they were charging like $4.95 per trade. That's to get in the trade and get out of the trade. So right off the bat, you're in the hole on a lot of these moves back in the day. So Robinhood came in and did that, and now if you buy some stock on Charles Schwab platform, you don't pay commissions, but you do pay commissions if you trade options. It's gonna be interesting to see what happens going forward. I'll be keeping an eye on this right here, because I do still have my Robinhood account. I just don't use it as much, just because I do like Interactive Brokers, TradeStation a little bit more. There's a little bit more things you can do with it, such as with TradeStation, for example, you can install your own indicators if you're doing investing or trading. So that's pretty cool to see. I like that. But I would say that I hope that Robinhood does not go out of business, just because, like I said, they've done a lot of good things, but they need to clean up their reputation. For my meme stock boys out there who are watching, you know what I'm talking about. Early 2021, it was a struggle. With GameStop, AMC, the kind of games they were playing there, that was not good. I didn't like that. So that's been one of the reasons that I've kind of pulled back a little bit from Robinhood and been using these other platforms just to avoid that. So for those of you that don't know what happened with those meme stocks, it was I know GameStop and AMC were the lead dogs. There was a few others like Bed Bath and Beyond, and I think it was Motorola or Nokia. One of those was in there somehow. And anyway, what happened is that these Reddit users found out that GameStop and AMC stock was being shorted by well over 100%. I think it was 120% or whatever it was of what the actual stocks are out there. So what happened there is these people got together and they pulled their money together and they just started buying up the stock. And I'm telling you, like, within a day, GameStop and AMC stock was up like 40%, 50%. I'm talking about back to back. And there was, I remember one day it was up, I think over 100% in a single day. I mean, most stocks don't make 100% returns in a year, let alone in a day. So Robinhood went in there, and they were, at the time, they were owned by this company called Citadel. And Citadel lost about $5 billion shorting GameStop and AMC stock. So they went ahead and they locked transactions with GameStop and AMC. But so you could not buy the stock anymore, but you could only sell it, which means if all you can do is sell it, then the stock will go down. So there's a little history lesson right there as to what the issue was with Robinhood back in the day. So hope you guys enjoyed this video. Once again, remember to like, subscribe, and put a comment down below. I do look forward to all that. I do read them all. I do reply to them all. So I'm excited to hear what you guys say about this. Do you like Robinhood? Do you hate Robinhood? Are you a fan of Google? Do you hate Google? Are you Bing? Are you DuckDuckGo? Whatever. I'm looking forward to hearing all that too. Thanks again. Later, guys.